Are you sick and tired of worrying about that little window of time right before your monthly check hits? That moment where you look at your bank account and your stomach drops because a bill is due on Tuesday, but your Social Security, your pension, or your retirement distribution doesn't drop until Friday. I know exactly what you are feeling. You are feeling a sense of fear. You are afraid of the dreaded overdraft fee. You are afraid that your local bank is going to whack you with a $35 penalty just because you are short by $2 to pay the electric bill. It makes you feel powerless, and it makes you feel like the traditional financial system is rigged against you. So what do? You start looking around for help, and you see this little green app with a cartoon bear named Dave. And the advertisements tell you, hey, we will advance you up to $500 with no interest, no credit check, and no late fees. It sounds like a miracle, doesn't it? It sounds like exactly what you need to bridge that gap. But you're smart. You have worked hard for your money your entire life, and you are sitting there asking the single most important question you can ask in retirement. What is the catch? Because in the financial world, my friends, if something sounds too good to be true, it usually is. Today, we are going to break down the Dave app for beginners. No sugarcoating, no confusing jargon, just the honest-to-God truth about how it works, what it costs, and whether it belongs anywhere near your retirement nest egg. Let's start with how this app actually works. Dave is a financial technology app. It is not a traditional brick-and-mortar bank. Its claim to fame is a feature called ExtraCash. This is where they offer you a short-term advance of up to $500 to cover you until your next deposit. They don't run a credit check. They don't look at your FICO score. Instead, they ask you to connect your primary checking account to their app. Once you link your account, Dave's computer algorithms nose around in your private banking history. They are looking to see two things. Do you have a consistent history of recurring deposits, and do you keep a positive balance? If you receive regular monthly deposits, like your Social Security or a pension, and those deposits total at least $1,000, the app approves you for a specific advance limit. Now, listen to me closely. Just because they advertise up to $500 does not mean you are getting $500. Most beginners get approved for a much smaller amount, sometimes just $25, $50, or $100. If you accept that advance, the money is sent to you, and Dave sets a settlement date. That settlement date is almost always your very next deposit day. The moment your Social Security or pension hits your linked bank account, Dave automatically reaches right into your account via an electronic withdrawal and takes their money back. You don't have to push a button. You don't have to mail a check. They just take it. Think about the math here. If you take a small advance of $100 and you pay a $5 express fee plus your monthly subscription, you just paid $6 to borrow $100 for maybe 1 week. If you calculate the annual percentage rate on that, what we call APR, it is astronomically high. It can easily climb into the hundreds of percent. It is a payday loan wrapped up in a cute, modern app with a friendly cartoon bear. The biggest danger here is not just the fees, it is the psychological trap. When you are living on a fixed income in retirement, every single dollar must be a soldier working for you. If you start relying on an app to advance you $50 every single month, you are robbing Peter to pay Paul. You are creating a loop where next month's check is already spent before it even lands in your account. You become trapped in a cycle of digital dependency, always playing catch-up, always living in the past instead of securing your future. And what happens if your deposit is smaller 1 month, or if you have another emergency right after Dave takes their money back? You are left completely stranded, with an even bigger hole in your budget. So, what is your actionable takeaway today? If you are currently using the Dave app, or if you are considering downloading it because you are scared of a cash crunch, I want you to stop and take a deep breath. You do not need an app to manage your cash flow. You need an emergency buffer. Your first line of defense is to look at your budget with ruthless honesty. Look at where your money is going the week before your check arrives. If you are consistently running short, we need to adjust your spending or find a way to align your bill due dates with the days you actually get paid. Did you know that most utility companies, phone companies, and even credit card issuers will allow you to change your monthly due date if you simply call them and explain that you are on a fixed retirement schedule? Call them. Move those due dates so they land right after your income drops. Your second step is to build what I call a freedom fund. I want you to do whatever it takes to scrape together just $200 or $300 of your own money to sit permanently in your checking account as a shield. Sell something you don't use, cut back on eating out for 1 month, or look into Dave's own side hustle feature within the app if you want to do a few simple online surveys or local gig work to earn some extra cash. Put that cash directly into your account and leave it there. That $200 is your own personal cushion. It means you are your own bank. You don't owe Dave, you don't owe a payday lender, and you never have to give an app permission to reach into your bank account and pull money out. The Dave app is a tool designed for gig workers and hourly employees who have fluctuating weekly paychecks. It was not built for the proud, disciplined retiree who deserves financial peace of mind. True financial freedom in retirement means knowing exactly what you have, exactly when you have it, and never being at the mercy of an algorithm. You can do this. Take control of your money, stand in your truth, and protect your hard-earned retirement.